Hello traders, welcome to today's market analysis, and for this video we will explore some of the patterns or the technical patterns across the Forex market and also the commodities. We will also talk about the German DAX, which I think it may be important for some of you. But let's start with Dixie, as always, as I used to say, the captain of the ship. At least for now, it's still fighting with this major support level at 103.99. Basically, it's the weekly fractal support level. Nice bounce, reinforcing, let's say, a channel, a parallel channel, descending channel, support line, and it's starting to show something that I want to share with you, or something that may start to unfold. Let's say the pattern that I will show you now, it's far away from being completed or formed, so let's also take that into consideration. We need to wait for those patterns to form, and only after the formation we start to react. So one of the patterns that I think it may be important to track, an eventual inverted head and shoulders pattern formation. We need to see the formation of the right shoulder. Usually I want to see the reinforcement of this fractal resistance. We have a new fractal at 104.51, so I want to see the reinforcement of this fractal again as element of resistance, and if that happens, I will pay attention to the formation of this potential right shoulder. Of course, there's always a possibility to reject this previous resistance level and keep trading lower, but that's something the only time will confirm. But one of the patterns that we should be paying attention to is the eventual inverted head and shoulders pattern formation. Of course, if that pattern unfolds, we will expect at some point a move to the upside on the Dixie inside this, which will reinforce, let's say, the idea of this descending parallel channel, and of course will reinforce this structure support level. Now, the cable, we talked on my last video, we talked about a daily time frame chart on I shared with you a daily time frame chart for the cable, and also this lower time frame chart or lower time frame, lower degree cup and handle pattern formation with targets at 130.51. That's a 200% Fibonacci extension. We have a new fractal resistance at 130.45, and as you can see, the cable not finishes because it still missing. We still miss a few hours to finish this session today, but as you can see, we are now facing the very first Fibonacci level, the 23% Fibonacci retracement level, and also the previous resistance and monthly fractal resistance level at 128.60, actually 128.94. Of course, the recovery of this fractal resistance may trigger more downside momentum for the cable, but this is an important level for the cable because it may be used as a new element in this time as potential support. Again, I usually target the 38% Fibonacci level. I still believe there is room for that to happen. We have a weekly fractal resistance, the previous and most recent fractal a few points below 28.61. The same exercise that I'm sharing here may actually work at the 38% Fibonacci level, basically the previous and most recent fractal resistance level. And for that to happen, of course, we need to see the cable trading a few points below these, at least the recent lows and the previous monthly fractal level. Euro versus the dollar, the same applies here. We have patterns projected at 110.85 on a daily time frame or a higher degree scale, but we have also a new fractal resistance at 109.48, actually a new daily fractal resistance. But most important at this point, a daily fractal support at 108.70. So this level may act as potential support for more upside momentum, of course, but also for another pattern that may start to emerge, and of course this will be inverted with the Dixie, the eventual head and shoulders pattern formation. Of course this will be used as a neckline at 108.70. We need to wait for the formation of this right shoulder. We can start to track the eventual retracement, eventually. Basically, actually my example points exactly to the 61.8% Fibonacci level. I will not be surprised to see that bounce towards these levels, and then eventually if the price finds resistance, we may see a fall. And of course we need to wait for a violation of the support level, but that points, this is a pattern that points to 108.21. It's not a big and huge projection, but that's what it is. We need to consider the possibility of a drop below this major support level, or this daily fractal support level, and retracement back to this 108.21. Of course, those who are searching for long positioning for the upside, of course, these may be eventually a nice opportunity for you to manage your risk based on the recent price action and the recent support levels. You can try to use this support level as let's say a platform for longs. But always take this into consideration. The market can actually start to bounce, complete or form this right shoulder, and eventually drop below the support level. Now let's jump into the Australian dollar. We talked about this bearish crab pattern completed at 67.77, pushed a few points above. We have a major golden Fibonacci level 67.98. We discussed this before, but most important at this point, after the drop that we expected, we are also approaching the eventual symmetrical projection for the Australian dollar. So basically we have a symmetrical pattern projected at 66.70, so just a few points below the recent lows. Eventually this session will not be enough to put the price there, but something to pay attention to for the next week actually. The formation of this symmetrical pattern for the Australian dollar. Let's jump into the dollar versus the Canadian. We had some data recently, a few minutes before this video, or a few minutes before I started to record this video. We had some data for the Canadian, which triggers this potential violation of the intraday resistance at 137.18. We have patterns at 137.41. Basically the same pattern completed at the golden Fibonacci extension level 136.96, 161.8% Fibonacci level, which forced a pullback or a retracement. A bearish shark pattern extended to the 224% Fibonacci extension level 137.41. That's the completion point of that pattern. We have also a trend line resistance, which may help the formation, or let's say the pressure to the downside may increase with that element approaching from above. So as we can see, we have a bearish shark pattern right there, which may impact or may put some pressure for the Canadian, and we may see a retracement for the pair. Also something to follow also for the next week. We have also just a few examples for the Norwegian krone. We discussed this pattern before. 10.88 golden Fibonacci extension level. Actually we are already in this price range or price zone. To complete this sequence, I will expect also a retracement for the Norwegian krone. We discussed before the formation of multiple patterns above on higher time frames, weekly time frames for the Japanese yen pairs, multiple patterns completed for the dollar, the kiwi, the Canadian, the pound, the euro versus the Japanese yen, also all of them sharing some potential bearish patterns on higher time frames. Something that I want to share with you for today, it's dollar versus the yen on a lower time frame. Let me also update some of these levels. So we have already a new fractal support, the 4 hours fractal 155.35. Let's also update the recent resistance. We have a new fractal resistance at 57.86, right at the 38% Fibonacci retracement level. The daily fractal, of course, it was already moved to the previous fractal resistance, and we have also moved the fractal support to this previous structure low. So we have adjustments made. Weekly fractal above 161.95, previous support level broken at 160.25. New daily fractal resistance 158.86, and as we can see, we have also some let's say lower degree of intraday resistance at 157.86 as barrier for moves to the upside. So now converging with these 38% Fibonacci retracement level. Something that I want to see a retest of this previous resistance level. These may work as a neckline for eventual pushes to the upside, not unlimited, everything as a default targets. So if you track the potential edge and shoulders pattern formation, let's imagine a situation where the price will reinforce this resistance, print the right shoulder and then starts to bounce, we can start to push our tools and track the possible extension. So as I said, it's not unlimited, it's not an unlimited move to the upside, but at least it points to a potential retest of these previous structure highs. So that makes sense after printing new support level, new lows, 155.35. If the price recovers above the 158.86 in a form, let's say in a form of an inverted edge and shoulders to trigger that move, so be it, and we will be here to track that possibility. So that's one of the possibilities. Of course, the other possibility is exactly the reinforcement of this neckline or the reinforcement of this resistance and more downside momentum for the pair. It happens a lot of time. We track the possibility of an inverted edge and shoulders to trigger the reversal after the pullback or after the retracement. We track the potential inverted edge and shoulders, to track the potential move or the potential inverted or reversal price behavior, and suddenly we are already approaching the previous lows and expecting the price to break lower. So pay attention to this resistance level. 158.86 will be crucial for the pair, or to form the edge, the right shoulder, or to find measure or to reinforce this resistance as a major fractal level and print and force lower prices for the pair. So for now, wait and see. Let's expect the retest of the daily fractal, and we will be here to track that, as I said, that possibility. Now, euro versus the yen, very much the same situation here. Let me also update some of these levels. We have a new daily fractal. Actually, we have a new fractal support adjusted to the new lows, very similar to the dollar versus yen. Weekly fractal resistance, previous structure highs, as you can see. We have also the daily resistance moved to these previous highs, and a new fractal very similar as on the dollar versus the yen, already adjusted to the most recent highs. Very much the same expectation here, a retest of this previous resistance, eventually reinforcement of this level as resistance, and we will track the possible the eventual edge and shoulders that can start to unfold from this range. Very much the same situation here. Pay attention to 172.92 for the euro versus the yen. Let's jump into the euro versus the pound, something that I want to update because we don't have anything to do at this point unless you pushed this trade to the upside. If somehow you trigger this trade at 83.87, this is the price zone where you should, and this is my advice, where we should start to partitioning your trade, move your stops to break even. We don't know what will happen from here, if the market will keep trading higher, if the market will start to drop from here. This is a 38% Fibonacci level, previous structure resistance also, previous structure support may act as element of resistance from these levels, so don't get surprised. So this is a price where we should start partitioning our trades. Also, let me also track the golden Fibonacci extension of the last swing low, which points probably exactly where we are now. Golden Fibonacci level, let me delete my previous, exactly. So this is a pressure Fibonacci extension level, 84.30, golden Fibonacci extension level, 38% Fibonacci level. If somehow you enter long into this bullish crab pattern completed at the golden Fibonacci below, you should pay attention to this lower degree minor Fibonacci extension level at 84.30 in convergence with this 38% Fibonacci retracement level. Euro versus the Aussie, something that can emerge for the next week and something that I want to pay attention to. Eventual patterns, let me increase my time frame a little bit for 4 hours time frame chart. Nice channel resistance. We have previous weekly fractal at 64.20. There's two possibilities that I'm tracking. Actually, there are three possibilities, two of them most important at this point because we are close of this, we are approaching at least these price zones. 163.71, 88.6% Fibonacci retracement level. This is a bearish bat pattern, and usually this is not something that I track at the bottom of the structure. I always search for the bat pattern at the highs and not at the lows once the price creates these weekly fractal support, including so this is not a pattern that I search for, but it can happen. The market will retest this weekly fractal, it may find some pressure there and will not break above the fractal, and it starts to retrace. The other option is a violation of the resistance, the formation of the bearish alt bat pattern at 64.76, and then the price starts to drop or to pull back. And this is something that I will pay attention to. 113% Fibonacci extension level, threatening the previous resistance. A lot of people will be engaging the market expecting a move to the upside. They will put their stops right above these, or actually right below this previous support, previous resistance level. They will try to engage the market higher. They will put their stops somewhere below this fractal resistance level, and eventually the formation of this sequence may bring the price back, hunting all these stops positioned below. That's my expectation. Sometimes it fails, the market will rally, and if that happens, eventually later we will pay attention also to one eventual crab pattern extended to the golden Fibonacci level. But for now there are two levels that I think we should consider. First of all, a retest of the weekly fractal 64.20 and the eventual formation of the bearish alt bat pattern above the fractal resistance 64.76, 113% Fibonacci extension level, and I will expect a retracement if that happens. Now we have also the pound versus the New Zealand. Very similar situation here, but I'm already expecting a push to the golden Fibonacci extension level 2.1683. I will expect a violation of this previous and major fractal resistance level. Once that happens, that will put the price very close to the formation of this pattern. Many traders will eventually engage the market to the upside, the same methodology I will apply here. Many traders will put their stops below the previous resistance level. The pattern will complete and it can bring the price lower after the formation, hunting all these stops positioned right below. Again, always track the default targets for those patterns. Don't create false expectations. And this is what helps me to manage also my risk. As I said multiple times, I'd never enter the market to lose more than I would expect to win. So that being said, if I enter the market at 216.83, I will target the 38% Fibonacci retracement level. And as you can see, 38% Fibonacci retracement converges with the previous resistance and fractal resistance level, weekly fractal at 212.60. That's the perfect convergence between the default target for the pattern, a violation above the major resistance, and a retest of the recent and previous fractal levels. That's something to track for the next week also. Now let's track gold. We have been warned about this possibility, specifically about this move above the major resistance level. I talked about this precise and eventual, of course, I'm not owner of the reason, but we talked about this precise move above the major resistance, a threat to break above the major fractal resistance level 2450, the formation of the pattern converging with the previous fractal resistance levels, new fractal above at 2483, and then the price starts to pull back. 2392, this was the previous resistance and fractal resistance level. This was my default projection for a fall or a drop for gold. We are now approaching these levels. We have also the 50% Fibonacci retracement level at 2385. Something to consider next week, the potential eventual, let's say, let's see how the market will react at this box if reached. Something also, again, something to track for the next week. The silver market, another one that we tracked with potential or eventual edge and shoulders pattern formation. We have this daily fractal support level right here acting as a neckline, violation of these levels triggering this head and shoulders pattern. And we finished the week, actually not finished yet, as I said before, a couple of hours before that, but we have reached a cluster box, and the bullish crab pattern was formed already on silver at 29.08. Nice cluster here. I will not be surprised to see a bounce from this price zone, eventually an approach to this weekly fractal support level 28.55, and if that happens, that we should also pay attention to an extension below support levels. But I'm expecting something to happen inside this minor range between, this is a cluster between Fibonacci retracement and extension levels. We have the golden Fibonacci extension of the last swing high projected at 29.08. Actually, that's the formation, the completion point of the crab pattern. And we have also the 88.6% Fibonacci retracement now being reached at 28.92. So this is a price range also to consider on silver. I will expect a bounce before breaking this weekly support level. To complete these thoughts for crude oil, I have two levels to consider. In particular, the 79.84 below this fractal support level. Well, I want to see a threat to break these lows with the 113% Fibonacci extension projected at 79.84. And to complete my video for today, I called your attention for my bold vision for the German DAX, actually bold but viable. And here we are back to the daily fractal support 18,219. Violation below these lows may trigger a retest of this previous support level. So if this pattern completes, we already know what to do. Something to track, of course. We are far away from those levels for the German DAX, but that's something to track for the next week, the continuation of this bearish momentum. We should see the price extending to the golden Fibonacci level. By default, that's what the market tends to do. False breakout above, confirmed with the violation of the support, should trigger the price, should force a move towards the golden Fibonacci extension. That sequence completes the bullish shark pattern. At the golden Fibonacci level, we should expect a 50% Fibonacci move towards 18,327. So, and this finishes my video for today, my technical insights for today. I wish you all a beautiful weekend with your friends and with your families. And I hope to see you in my next video. See you there.